Good morning and welcome to another episode of the Insurance Leadership Podcast. I'm Ryan Eaton, your host, and honored to have you listening in today. Today we have two guests who are going to be talking about how they grew their company from $2 million in capital and surplus all the way to $100 million in capital and surplus. It's going to be a great episode that you don't want to miss, but it's also extra special for me because we have David White, who is the CEO of our company, and Rick Eaton, who is the COO of our company, also my father on the show. So it's extra special for me today, and I thank you for listening in. So David, why don't we get kicked off today with you giving a little overview of what AmFirst looked like 20 years ago, what it did, what products, all the good things to kind of give everyone a background.
Yeah, well, 20 years ago, AmFirst was just, AmFirst, the holding company, was just getting started, because before that we just had insurance company, didn't start until 1999. And so AmFirst Holdings was AmFirst Insurance Company, and that was really all that was in it at that point, wasn't it, Rick? We didn't have it. We called it a holding company, but it really was just one company.
Holding itself.
Yeah.
Wasn't much to hold.
Yeah. Well, Rick, why don't you give us a little financial picture of kind of what the size of AmFirst at that point, kind of give a little overview.
Well, you know, when we first started, we had minimum capital and surplus. We had $2 million in the holding company, which is all in the insurance company at the time. But we didn't have very much to play with. I mean, we had to be very careful with everything we did, because if you weren't careful and things didn't go right, you could be insolvent from a regulator standpoint in pretty short order. So
I think the required capital and surplus was $1 million. It
was.
So we had two, so you couldn't make a very big mistake.
So y'all were basically at a spot where every decision mattered, because one bad decision could have a significant impact on the financials, correct?
Correct.
You know, you didn't really think of it like that, but that is the case. You know, for some reason you knew you had to make the right decisions, but you didn't think that every decision would cause you to go out of business, but it could have.
You couldn't have a loss.
No,
I mean, that was
no, you could not. No, you could not. So looking at where you guys have come to now, looking where the company's grown to, now we have over $100 million in capital and surplus on the books. Looking at that, did you see at that point, did you have a roadmap to get to this spot? Did you know you would be here one day? What was kind of the thought process 20 years ago?
Yeah, I'm not sure that we had a roadmap that said, okay, this is how you get from 2 million to 100 million, but I think that we talked about how to be successful every year. We talked about how to make our underwriting profit. You know, a lot of larger companies, even in those days, had over 100% loss ratio and expenses.
Right.
And but they could earn 6, 7, 8% on their investment income.
That's right.
So they weren't required to really make an underwriting profit. We had no investment income because everything we had was capital and surplus. So we had to make a profit in with the product itself. And that's the way we started, and it's the way it's always been. So that's a very positive for the company for the last 20 years, I think, don't you, Rick?
It was, and we spent the early years on a weekly basis looking at claims, because if things went south, we had to be able to catch it quickly, or else we would be out of business. And so we had to look for the results that we had every week. How much were the claims? How much was the premium? Because if things started going south, we had to catch it in a hurry.
So this is what's fun about interviewing people you know in the company you work with, is because I knew there was a Christmas tree report that we talked about, which showed green and red based off winnings or losses. And I remember at one point it looked like it was on fire, and it was not a pretty report.
You remember that well?
I do. So tell the story. I think it's fun just to give the audience perspective. The story of how our number one product now, the Premium Saver, what it was like at one point, probably 9 months in, and that report was on fire and it got canceled 3 times in a drive from Jackson to Oxford. I'd love to hear that story.
No, we were driving, Jay Brooks and I, who was a sales manager at that point, were driving from Jackson to Birmingham to meet with Delta Dental. I remember that very well. And so Sigrid Wells had generated this Christmas tree report, and basically if it was green, those particular groups were making money, and if it was red, that particular employer was losing money. And on this particular trip, I mean, it all looked red to me. There was very little green on the report. And I said, well, Jay, if we lose this much money, the company's gonna be out of business. And I said, tell them to stop writing new business, stop writing new business. And he said, okay. And he called back to Ed and said, don't write any more new business. And then we talked a little more. We said, well, maybe we can make it another 30 days and try it out. And so between the 4-hour drive from from Jackson to Birmingham, we stopped and started 3 times. And finally we got to Birmingham and we said, okay, what we're gonna do is we're gonna go another 60 days. We're gonna see what happens. And if it doesn't get any better, we're just gonna shut it down. We're not gonna keep writing this product. Well, what we didn't know was the large A+ rated carrier, they'd probably be happier if I don't mention their name, we thought surely their actuaries could have done a great job pricing this product. What we didn't know is we were losing about $200,000 on $2 million. Well, they lost $9 million on $24 million of premium. And right after we made this decision, they raised their rates 45%. We raised our rates 42%, and since then we had never had to raise them again.
That's right.
So that just goes to show you, if you're a small company and you see a large company doing something, don't necessarily believe that theirs is the right formula.
Well, it's funny you say that. Cabe Chaddock was on the show, and he said the exact same thing. And coming from the actuarial side, he had the same advice.
It's probably a little easier from the actuarial side than it is living inside.
That's right. having to look at the report. So look, let's walk it back to kind of what have been some of the success principles that you've seen over the years, or the reasons for success? Obviously, great people, and there's other things like that have helped the organization, but kind of walk that through. Rick, why don't you get us kicked off with that, kind of what you've seen?
You know, David will be embarrassed for me to say this, and he may not look like it, but he's one of the smartest guys I know.
I agree with everything you say, Rick.
David has an idea, and it's hard to keep up with David. But he is the best I have ever seen in terms of designing insurance products, coming up with new ideas, and really one of the reasons that we are where we are today is because David really stays in touch and involved in the product designs and in watching the results of those products. And we were so small back when we first started, and we're still relatively small, but we can make changes overnight. If we see a product that's not working or a product that needs to be tweaked, we don't hesitate to make changes, and we can make them very quickly because we're nimble and can do that. And that's kind of been David's philosophy. If you got a loss, cut those losses quickly.
All right.
And so that's what we learned through the years, and I think that's how we operated during the first few years, is that since we couldn't afford to have a loss, we reacted very quickly, and David really gets the credit for that because he was staying on top of that and making changes where we needed to make them.
Well, I think that the other thing that we did is we looked for niches. We can't compete against the Prudentials and the MetLifes of the world because we have to do it a little different, and we have to be able to be in a place where we could make a better profit than maybe they could because their volume is so big. Right. And I think, you and I have talked about this before, Ryan. What Zig Ziglar says is every great idea is just a slight variation of someone else's idea. And the Premium Saver which is our flagship product, is exactly that. And I think over the last 20 years, we have tweaked it a number of times, but it was the tweak of someone else's product that we took and we said, this could be something that could really fit a marketplace that no one else is in right now. And so I think what I was able to do in that case was find that niche and design a little bit differently to fill that niche, and that's what it's come to be. And now it's a product that a lot of people write. I don't think they do it as well as we do it, but there's other variations of it that people have tried to use.
That's right. So let me ask y'all this, kind of jumping from successes over to big decisions in the company over the years. have you ever made any big decisions that at the time they felt like huge decisions, but maybe they were very pivotal for the organization? I can, from my side of it, I can think of a few that you've made, but I'd love to kind of hear maybe someone at the time you might have been puckering a little bit, wondering if this was the right decision to make, or, I mean, it might have a big impact one way or the other. I'd love to kind of see how you handled that decision thought process.
I can tell you one right off the bat, and it was the pivotal decision or step that we made in the organization. David, I remember the day David came in and said, we had formed a foundation back in 2005 for other reasons to be able to give to people that were doing charitable kingdom work.
That's right.
That were not nonprofit organizations. But in 2008, David came in to my office and he said, Rick, I believe that God wants us to start contributing to our foundation or giving at the rate of $1 million a year. And at the time, we were doing well, but we weren't. Things had really not taken off in the organization. But that was a pretty big chunk and that meant $87,000 a month that we were going to take out of our budget and give away to ministries and orphanages and other organizations. But it turns out that was probably the greatest decision, the greatest step of faith that we ever made, because from that point, when we decided that we were going to partner with God and get involved in God's business with the profits from the insurance company, God got involved in our business too. And that was the pivotal point in our organization, I believe. Don't you think, David?
I do. I do think that was the profitability part. I mean, I can think of other, not decisions, but when we ended up selling Morgan White to the Marshall Ratner Company, which enabled us to get the $2 million to start the insurance company. But from a profitability point of view, I think 2008 was the pivotal time. And you can go back and look. It's interesting, the premium saver does better when the economy is not so good because our biggest problem is getting the broker to even show it to the employer, because you have to use 2 cards instead of 1 card and all the things that it is required. But it saves the employer money on his major medical costs. So in 2008, the economy sort of fell apart. You remember that was the .com bust and all that, and people were flipping houses, and there's all kind of stories about that. Well, that economy shrinking caused employers to say, hey, I want to know anything that can help save me money on my major medical costs. So all of a sudden, brokers were required to be showing this, and our business went up exponentially at that point. And this all happened in 2008. People would say, well, that's just a nice just a coincidence. It's not really, but it just happened that way, and we can look back at the point where we made the commitment to do that for God and give that money to those orphanages and kingdom work all the way around the world.
That's right.
Maybe it is a coincidence, but it's an awfully good one.
Oh, that's right. The impact y'all have had through that, and I can say as being someone who's on your team, that your leadership to that, from the leadership side, your leadership and working for a place of purpose, Rick, as you said, and having an impact. The achievements are great, but the impact you're really having on other people is the main goal at the end of the day.
We love what we do, and we believe that we're called. We may not be pastors or preachers, but we believe that we're called in this financial world to make money so that we can be a benefit and help to those that are preaching the gospel around the world and doing good for the kingdom. And that's why we've got outside on our sidewalk, we've got a plaque that says a place of purpose, because even though we're in the insurance business,
that's right.
Our purpose is really to serve God, and I think because we're doing it through our profits, that God has gotten involved in our business too, and so we love what we do, because it's not just how much money you can make, it's the people that you can help as a result.
Yeah, I think there's a lot of books that talk about this. There are lots of people that are successful, but that success doesn't satisfy you. You've got to do something significant. And the difference between success and significance is, what do you do with the money that God has blessed you with? I mean, you see people that got billions, but what are they trying to do? Earn more billions. Yeah. But that still is not the thing that's going to satisfy you. It's realizing that you're here for a reason, and what is that reason, and are you accomplishing that task? Because just making a lot of money doesn't satisfy you.
No, I like that, and talking about a place of purpose, and I feel like for the majority of the people who work at Morgan White, whether you call them team or employees, we've seen growth, right, since 2000, from 50 now to close to 300 people here working at the offices, and they love working that is a place of purpose. But how did you guys decide when the company was growing, hey, we need to hire more people, or hey, we don't need to hire more people, or what mistakes did you make in hiring people, maybe that you didn't need to bring on, or they weren't quality people? What's kind of the secrets there that kind of got you to where you are from an employment standpoint?
Well, that success in 2008 taught us a lot of lessons, because we were so successful. And we needed more, our service was not as good because we had so much more volume. And at that point, we didn't even have a HR director. And we finally hired an HR director, and then we thought, well, if we just throw more bodies at it, that will solve the problem. And you realize that if you throw more bodies at something, then you don't train them right, then the service doesn't get any better. In fact, in some cases, it gets worse.
And it did.
And it did at that point. But now we have a plan. We have an HR director. We know that when people tell us they have these skills, we can test for those skills. And we have a great training program that takes the people that come in and trains them on our processes and our system. And I think it has been a lesson that was, in fact, those days when we hired a lot of employees and they weren't trained, and a lot of them couldn't do what they told us they could do.
They were proficient with Excel, and they didn't know which icon was Excel after they were hired.
That's exactly right. And from a service point of view, we call those the dark days.
That's right.
But people remember that, and so we never want to go back there again. But I think our process now is very good. Our HR department is very good, and you grow all these things as you grow. But when you have a surge like we did then, and we didn't have the experience, we made mistakes. And the idea, you'll always make mistakes. If you're an entrepreneur, if you're growing a business, there will be things that you do wrong. The key is, don't do them again. Yeah. Learn from those mistakes and make it better. And I think that's one of the things that we've been able to do very well.
So how do you know when it's time to maybe hire a compliance officer, hire a sales manager, hire the specific positions? It becomes too much of a headache that it's pulling your time where it's not the best return on investment of your time? Is it, hey, we have the money to do it now we can do it? Or is it, hey, we need extra? What's that look like?
Ryan, a lot of what we've done in terms of growth has been driven by what the regulators required. We get lumped into big publicly held companies when it comes to regulation. They have certain requirements that they apply to large publicly held companies. And so we have, from the early days, we decided, early 2008 forward, we have decided that we needed to have compliance folks just like the big boys did.
Right.
And that's really served us pretty well, because when we get reviewed by AM Best or even our state regulators, and they see we've got these programs in place for risk management and for compliance, that goes a long way with satisfying the regulators, but it also has been a big help for us internally as well. It's made us do things that we probably wouldn't have done without encouragement from regulators.
And then, as we formed other insurance companies, now we have 4 of them. All of that compliance that we have in Morgan White can be done for all 4 of them, so that makes it more efficient.
That's right. You can spread it out.
Exactly.
So what does, you've seen the growth, you're optimistic about the future. How has leadership changed to you over the last 20 years? What have you seen now that you're like, yeah, I probably didn't look at that great back then, or hey, I made this great decision back then. I've kind of held that principle through. What are some things for both of y'all that you've learned?
We have such great management in our organization, and most of it has grown up in the organization. But I think the thing that we took from our friends at Crum & Forrester has probably been as good a decision that we made. Rick and I were visiting them and trying to understand what they were doing, and the lady, I remember very well, she said, yeah, we're flattening our org chart. And we said, what do you mean by flattening your org chart? And she says, well, we're elevating certain people so that we can bring other management under them and have better training. And when you're a family-owned organization like we are, and the top people in the organization are all family members, if you're not a family member, you look at it and you say, well, where am I going to go? And these are your people that you want to keep because they're talented, but they're looking at, well, I'm doing the best I can do. So what we did, if you remember, I don't remember how many years ago it is now, probably
3 years.
Yeah. Well, so we brought all you guys up to an executive vice president level, and then we moved all of our department managers to a vice presidential level. Well, that made people under them be able to be promoted too, and made them see that there was a place to go. And so I think that's helped us a lot in management per se. And it's helped our organization because people look at where they are and they say, if I work hard and I do a good job, there is a way that I don't get blocked from going any higher. So I can be promoted. I can get to the managerial level. There's a way to do it.
No, that's good. And because our organization is so dependent on technology, and if you're going to stay on the forefront of insurance business, you need to be heavy in the technology side and state of the art. And we've got people now like yourself and Jason, Ryan, Tripp, those that are in key management positions that are very familiar with technology. David and I, may have come up when everything was paper, and we may not be on the cutting edge ourselves, but we've got people under us that are.
Yep.
And you've got to have that. You've got to have new blood that understands programming and understands how this world operates now, and people are buying stuff off their smartphones now.
And you have to make a commitment to the investment in technology.
Well, that's where one of the questions that I asked earlier about kind of the investments that you saw had big impact. That was one of the things even in my mind, because I remember back in 2008, 2009, we really said, okay, we're going to commit to this. I remember we got rid of all the paper in the office, right? We went everything electronic there, and that was just a small piece, but now we got Azure and all these different things. We're paying millions of dollars a year in technology to make everything secure and stable, and investing so heavily in programming and outside programmers. And it's a big piece of what we're doing. And I think that's great though from a leadership standpoint.
I think that gives us an advantage over the large mainline companies, because so many of them have these systems that have been with them for so long. That's right. We are a PC-based company, so we're not dependent on mainframe computers, and we were able to move to the cloud very easily. Right. And so I think that is why we've been able to do a lot of work for insurance companies, because they see that we've done the security, they see that we've got the technology, and they need what we have. And really, it's almost, when you got a really huge organization, it's hard to do a lot of innovation.
You're right. Well, there's just so many layers to it. So many people have to prove and walk through all this stuff. I'll say this too, from watching y'all, I love how we can still come to you with ideas, and typically within 5 minutes we'll have a yes or a no, right. And then hey, go do it, go knock it out. And that's one of the things I think that makes AmFirst and the Morgan White Group companies so strong, is that it's not just a wait. We went to that meeting with an insurance company, and I'll leave names out, probably 3 or 4 years ago, and we were telling them, hey, look, these benefits are a little out of date. We need to update them. And they told us it was going to take 4 years before they could update and refile the plans. And it's like 4 years to make a change, and it just blew our minds. And and you've seen that carrier lose market share because of some of those decisions. So I think that's been big.
I think that's one of the downsides of getting to be a really giant company.
Yeah, I agree.
is that the people who are in the marketplace and see the need for changes are so many levels removed from the persons who or the person who actually makes a decision, and so you've got to come up with a recommendation. You've got to get a whole proposal together and go present this to him, and then he's probably going to take it to somebody above him, and then it goes to the finance committee. And by the time all that happens, it's not, the marketplace has moved on to the next thing.
That's right. You missed your opportunity.
You missed the whole
missed your
thing.
opportunity. All right. So help me out here. What pitfalls do you see now, or what pitfalls do you think you get in more often now because you're at 100 million than maybe when you were at 2 million? And you might not say anything, but I'm thinking. I'll give you an example. Kind of one of the things I thought in my head was, our $100,000 decisions right now are not as big of decisions, obviously, as when it was 5% of our capital at surplus. Obviously, that's a huge change. But what do you think are some of the pitfalls that you have to keep your eyes open for now that you've grown to this level? Is it maybe employee-based? Is it financial-based? Is it, what does that look like?
Well, just to respond to that, I think you have to be careful to bring people up as this flattening of the organization takes place and give people more responsibility, because you're overseeing a lot more.
That's right.
And a good example of this is I used to be the chief financial officer, and Grant Gardner was our controller at the time, and we elevated those guys. I moved up to a different spot, and Grant moved up to chief financial officer. He is so much better at that than I was. I thought I was pretty good. But you bring in young blood, people that understand how things work, and you need to be able to give them authority to make decisions, and to highlight things that come up that we need to know about that we may miss because of the size of the organization. And if you bring in good people that are talented and give them some authority and responsibility for managing, that kind of mitigates the problem you have with maybe not looking at the detail that you used to look at. Somebody needs to still continue to look at loss ratios. We still do that. That's still kind of the key to everything, is we look at loss ratios every month. And if there's an uptick, we say, what's wrong? What's happening?
What's messing up?
But somebody has to look at that stuff regularly.
That's right.
I think that what Rick is saying is so important. If you're a type A personality and you're kind of a control freak, if you would, as you get larger, you have to make the decision, am I going to limit the growth of the company to what I can look at? Or am I going to delegate to somebody who may not do it exactly the same way I do it, but if I leave them alone, they'll get there. Yeah. And that's hard for somebody who's used to doing it yourself and making those decisions, but it's the necessary thing, and that's the only way you grow management, is letting them make the decision. Right. And they may not make every decision perfect, but you got to let them make the decision.
I'm not sure if you've heard this. John Maxwell says that if someone can do something to 80% of the capacity that you can do it, delegate it. And he said, let it be at 80%. So
yeah, I think that's a big number.
Now that is. So looking back from a rearview mirror standpoint, what lessons have you learned that you can share with the company that's listening in, or the agency that's listening in right now that's trying to grow their business to the next level? They're trying to get from $1 million to 2 million, or 2 million to 5, or 5 to 10, or 10 to 25, and trying to hit those new levels. What would you say from a growth standpoint, from a impact in your organization standpoint? There's a million things you could say, but what would be your favorite lesson that you've learned?
That's a tough question because it's pretty broad. But
it is.
But we talked about this earlier, that we just keep coming to work. We just show up every day. It's one of those things, and we love what we do because we're called to do this. And you got to make sure that whatever you're doing,
you got to be happy.
You got to be happy. If you're called to do something and you do something else, you're not going to be very happy.
No. Right.
And so, first of all, for those agencies out there, for those companies that are small out there, you got to love what you do. Right. You got to know that this is your purpose. And if you do that, that keeps you in the game. Engaged. It keeps you engaged, and moves you to the next level. But if you're not committed and you don't feel like this is what you're called to do, then you're going to struggle all your life with that. And so I think that's the key initially, is just to find out, is this what I'm supposed to be doing? Is this my purpose?
Yeah.
And once you've established that, that provides the fuel for growth.
Yeah, I think the other thing is whatever you decide to do it with excellence. You can't shortcut and expect people to see something really significant or somebody they want to do business with if you're trying to do it on a reduced basis. I think quality of product and quality of people is what draws your customers to you, and I think that especially if you're small, like we're talking about trying to grow it, you've got to find niche markets. You cannot, I used to be in the heavy equipment business before I got in the insurance business, and I often look back now and say, what gave me the idea that I could compete with Caterpillar or Komatsu or John Deere or any of these big companies? Because the only thing that we could do is fit little places where they were not.
Yeah.
And trying to do exactly the same thing they were doing is just a recipe for disaster. You can't do it because they got so much more capital, they can bring so much more resources to bear than you could. So you have to take where you are and say, okay, let's take the next step. And then once we get to the next step, then let's look at the next one. It can't be, you could have a grand plan that's going to go all the way, but right now technology is changing so fast. Things that you and I look at now are saying, wow, I can't believe that they got that valuation. Didn't exist 3 or 4 years ago.
I know. Isn't that the truth? So look, that wrapped up my questions. I got one in this morning, though. Funny enough, came to the podcast, and I thought I'd throw it in here to you guys because y'all have both done a great job at this. But when you're growing a company like you're doing, you're working as hard as you are. And I mean, for you guys, you didn't say it, but y'all are in 42 countries, all 50 states. I think I heard the banking team the other day say there's over 92 bank accounts, and I think there's over 49 different companies set up. That's a lot going on. And then not to include the mission side, the foundation side of the organization, and y'all both have kids in the business and grandkids in the business and extended family in the business. With that, how do you make sure you continue to push forward from a business standpoint, but then also make sure you don't put your family on the back burner? And I thought that was a really good question, and I thought both of y'all could probably answer that.
Well, I think from our point of view, we make the family, since all the family's in the company, it's a great thing because everything we do together. So from our point of view, it's not having to make time for the family as much as it is what's the next thing our family's going to do together.
Yeah, that's good.
I love that our family all gets along with each other. I think that's a gift from God too, because
we actually like each other.
Yeah, that's right.
that is a huge gift because so many families really don't enjoy being around each other all the time. We do.
That's good. That's good. I love too that from saying this from an outside, if I was asked the question, I love too each year typically on spring break, a lot of the family gets to go to different places and take kids and other things like that too. It's another kind of special moment, I think, even for my kids. I got a son now who's 16, just started driving, which y'all both know that, but that has lessened my load in the mornings, which is fantastic. But I heard him say the other day, buddies were in the truck with him, and they said, what do you want to do when you grow up? They were asking kind of everyone, and I want to be a doctor, I want to be this or that. He said, I'll probably go do the insurance stuff with my dad. And I heard that and I was like, oh man, that's cool. But he's also seen the trip side, he's seen the fun side of it too, which has kind of engaged him at 16 years old.
See, that's what we're hoping for. You can't make people want to do something.
That's right.
But if they're around it enough and they see, maybe the benefits that you enjoy as a result of being in business together, I mean, I think that's a great thing. Nothing's better than being able to be in business with your family. Yeah,
that's right.
You like each other, you can spend time together reap the benefits together.
And I think the insurance business lends itself to that. You're in marketing, Jason's doing administration, Tripp's doing graphic design, Alan's doing investment. I mean, Grant's over here, the CFO. So all of us, Gene is our general counsel. So all of the people in the family are doing different things, but it all relates to insurance. That's right. You got to have all of those various talents.
Everyone's running different lanes.
Exactly.
That's nice. It's very nice. Well, guys, I can't thank y'all enough for being on the show today. This is it's been fun having my father, my uncle, family, and also talking about the success of the company and what you've seen. I just want to thank y'all for y'all's leadership as well.
Thank you,
it means
Ryan.
a ton. So
it's a lot of fun.
Thank you, guys. I appreciate it. Well, that wraps up another episode of the Insurance Leadership Podcast. I want to say thank you. We are so humbled to be able to have you listening in, and the emails and requests, and the shares, the likes, everything else you've been doing. Thank you so much for doing that. And remember, a good plan today is better than a great plan months from now. Thank you very much.